Hello, everyone, and thank you for taking the time to review the real estate market analysis for Morgan Hill for August of 2009. My name is Robert Whitelaw. I'm a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors and a certified ePro. I'm also the sponsor of this presentation through my company, Whitelaw & Sons Real Estate Services, serving all of Silicon Valley. There's a variety of ways to get in contact with me. You can find lots of information on my website, www.soldbyrobert.com. You can also email me at robert@soldbyrobert.com. If you prefer to talk directly to me, just dial 408-852-0525. If you prefer to chat online, you can get me using AOL Instant Messenger, Google Talk, or Yahoo IM using the screen name The Rebel Broker. If you're using Skype, the screen name is Rebel Broker. And, of course, referrals are always appreciated. Anyone who's interested in buying, selling, or investing in real estate in the Silicon Valley area, please feel free to get in touch with me. I can happily help you with any of your needs. And even if you're not interested in real estate in Silicon Valley, anywhere in the United States, just get in contact with me. Let me know what you're interested in, and I will find the right agent to help you reach your goals. I'd also like to encourage everyone to head on out and take a look at my weekly podcast on real estate called Real Estate Realities with the Rebel Broker. You can find that at www.therebelbroker.com if you're interested in finding out more about how to download that to your iPod, listen to it on your computer, or whoever you'd like to listen to it. Now let's go ahead and jump in and take a look at the statistics for past years for Morgan Hill in August of 2009. Now we'll be going just year to year, just the month of August, in order to sort of get an idea. We don't want to have a lot of seasonal influences playing a part here. We want to just see the numbers for the specific month of August so that we can really see how we're performing based on a year-to-year check-in of what the numbers are. Now, as you can see, the first number we're checking is our inventory numbers, and we've really had good news in the market in Morgan Hill for the month of August of 2009. We're down dramatically from 2008. We saw a pretty dramatic jump between 2005 and 2006, and of the communities I tend to really focus on, Morgan Hill was really hit first and hardest with the downturn in the economy, and these inventory numbers really demonstrate that. Santa Clara County in general was actually still enjoying a pretty robust real estate market, even on into 2006 and parts of 2007, but Morgan Hill got hit hard and fast in 2006, and now we're seeing a dramatic drop. We're definitely a nice recovery, better than some other areas in the county, actually. Inventory is down 41.3%. That is 133 fewer homes in the inventory in August of 2009 than in August of 2008, so that's great news. That gives us a grand total of 189 homes currently on the market in Morgan Hill. Now, if we go ahead and take a look at how many listings we had in the month of August, that's also good news. Now, the reason why it's good news is it's a decrease, right? We want fewer homes added to the market so we can continue to get these inventory numbers under control. You can see we had a pretty big jump in 2006. Now, that wasn't a jump based on short sales and foreclosures. Remember, that didn't really start happening till late 2007 and 2008, and really mostly late in 2008. That was really just folks seeing what the market was doing and realizing they should probably think about getting out of it. If they were going to move at all, they should do it then. And that's really why we saw such a big listing increase in 2006. The new listings decreased in 2009 by 38.6%. That's 29 fewer homes listed in the month of August in 2009 at the same time in 2008. For a total homes listed of 47. So that's a pretty healthy number. I mean, that's much more where we'd like to see it. It's not the lowest we've ever seen. But if you look, you'd have to go all the way back to the year 2000 when inventory was really low and listings were also very low. But at least the listing number we've seen for this month is actually pretty healthy. Now let's go ahead and take a look at the next statistic, and these are solds. This is obviously what a lot of folks are interested in, and again, we see it moving in the right direction. It's an increase from 2008, so that's also very good news. Sales are actually up 23.3%. That is 7 more homes sold in August of 2009 at the same time in 2008. They gave us a grand total of 33 homes that were sold in Morgan Hill in August of 2009. Now, overall, these trends are all very good for our market. Is it fully balanced? Almost. We're almost to a healthy place, actually, in the market in Morgan Hill. Now, one way I like to examine these numbers is to do the ratio between homes that are in inventory and the total number of sold homes. And that really gives us two ways at looking at the market. If we look at it one way, it can tell us how many months of inventory do we have on hand. And right now that stands at 5.7. Now that's not great. That means that it would take about almost 6 months to sell off the inventory if the inventory numbers and the sold numbers stayed the way they are until the inventory was emptied out. 5.7 is a little bit high. You'd prefer to see that number more like 4 point something for it to be what I would consider more of a healthy, balanced market. Another way of looking at this number is if you're a seller, thinking of it as sort of a competition index. Basically what it's telling you that for every home that is selling, there are about 6 homes, a little less than 6 homes on the market trying to get sold. So you're one of about 5 or 6 homes out there that are being looked at by a buyer, and only one of those homes is going to get picked. You really want to see this number more like around 4. I think that's a little bit more healthy. It's a little more balanced. You want to see it where the buyers and sellers, the sellers are able to get out of their house in a reasonable amount of time, and buyers are able to buy a house without having to make offers sight unseen as they were back in, say, 2005, 2004 in some of the really competitive markets. Now, what's interesting is that when you compare this to just the previous month, just the month of July, this is actually worse than it was in July. In July, it was 4.34, and the county is at 3.62. So we've kind of moved in the wrong direction here as far as August is concerned relating to this ratio. We'll see how it goes next month. But it's definitely a lot better than it's been historically. We've had months over the last couple of years where we've seen this in double digits, where we had 16 weeks, 10 weeks, 12 weeks worth of inventory on hand. So at least it's not way out in those crazy numbers anymore. So it's generally a much more healthy market than we've seen in previous months. Now let's go ahead and take a look at the same numbers, but now we're just going to look straight back chronologically. We're not going to go year to year. We're going to just go month to month, straight back from now. Going all the way back to March of 2008. Now, the first thing we'll take a look at again is inventory. We're just kind of getting an idea of what the trend is. You can see clearly that we weren't just seeing a month glitch where we saw such a dramatic drop year-to-year comparison. This has really been a steady decline in inventory numbers, which in general is a good thing. And you'll notice we don't see as many seasonal influences as we usually do. We did get a little bit of a dip in winter, as you'd expect, and then a little bit of a bump as we came out of winter or headed at least into the tail end of winter. But we didn't get some of the dramatic ups and downs that we normally see when we head into the holiday season. I think that just kind of tells us the type of listings that were out there that are in the inventory, where people didn't have a choice. They couldn't just take their homes off the market for the holiday season. They had to get these homes sold. So we didn't see as many homes being taken off of the market during those winter months. Now, the inventory numbers between July and August were down 7.35%, so 15 fewer homes were in the inventory in August than in July. That's kind of interesting. A lot of times you'll see, as we run up to July, you'll see an increase in inventory as more folks list, but we're seeing, despite what we would expect for seasonal influence, we're seeing a consistent decline. That's actually pretty good news. Whenever you see things not fitting in with the typical circumstances that you'd expect, you want to try and figure out why. And I think we're just seeing a lot of folks coming out and doing quite a bit more buying. We're seeing a lot fewer homes being put on the market, which could all spell pretty good news for the Morgan Hill market. Now, the next thing we want to look at is the listed homes per month. We can see that has really been relatively flat. It was a little bit higher back in March and April and May, and we've seen some pretty steady decline since then. We'll look at a minute and see the makeup of the homes that are being put on the market, and then as far as which ones are being sold as far as short sale, foreclosure, and conventional sales are concerned. But for right now, it's a pretty healthy number as far as inventory increases are concerned as they relate to new homes listed. Now, the number of homes listed declined by 11.32% between July and August. That is 6 fewer homes added to the market than in August than in July. So that's also good news. Now, let's go ahead and take a look at the sold numbers. You can see it's almost an exact opposite relationship to the number of homes that were added to the inventory through listings. You can see it's a gentle slope upward. That's really good news. We really sort of peaked out in June and July, which you'd expect. You usually tend to see in a normal market, you're peaking in June and July. I think August is a little early for us to see such a drop. Remember that these are homes that have sold, so it takes 30 days for those properties to go through escrow. Normally, we would expect to see a continued decent performance in August, and then start to see things start to decline a little bit in September as we exit the selling season. But still, sales are high enough to, I think, be enthusiastic about for this market. Now, sales were down 21.28% compared to July. That was 10 fewer homes sold in August than in July, but still, as I said, a pretty healthy number. Now, let's go ahead and take a look at how things broke down with short sales and foreclosures. Now, this is how it breaks down on what actually happened this month. We're seeing conventional sales making up 49% of the total number of homes that sold. 24% were short sales, 27% were foreclosures. Given what we've seen earlier in the market, when short sales and foreclosures were dominating the marketplace even more, when we were seeing anywhere from 60 to 80% of the properties being short sales or foreclosures of those that sold, I think this is actually pretty healthy. There are lots of properties out there that are in the short sale foreclosure situation, and I think that the fact that we're starting to see buyers for a while were really just looking at those short sales and foreclosures. They thought that was the place to find the deals, and so I think maybe the buying public and maybe the agents advising them are becoming a little bit more savvy about the fact that, folks who are selling conventionally in this market aren't ignorant of the fact that market prices are down. So you can go in there and really negotiate some great prices on conventional properties that won't come with the headaches that are normally associated with foreclosures and short sales. So I think that realization is what's playing into our dramatic increase in conventional sales. But I think also some of the most inexpensive homes that were in the short sale and foreclosure process have really sort of gone through that process. They're no longer there. I think also the fact that some buyers were finding it was very difficult to buy short sale properties and nearly as difficult to buy some of these foreclosure properties as far as delays are concerned. Some of them just went with other properties in the same area that ended up fitting their bill that were conventional properties. Now, if we take a look at the same data for last month, we can see that conventional properties actually made up more of the makeup of the homes that sold. 17% were short sales, 26% were foreclosures. So not a dramatic change in the percentage of foreclosures, really, but a pretty good drop in short sales. What does that mean to us, really? Well, since July, the June-July buildup is really a time when a lot of sales are going on, or when a lot of buyers are coming out. That's when a lot of them are starting their search. It was that first burst of sales, and that could also contribute to the fact that we saw more conventional sales than we had previously. So overall, I think that's generally good news. I think it's healthy to see conventional sales taking about half of the market. I'd like to see us consistently doing more than 50% conventional sales, but we'll see how things pan out in the coming months. Now, home prices, this is clearly one of the things that folks are most interested in. Let's go ahead and take a look at what they've been doing. You can see that since 2006, they've really been in decline. 2007, we saw a mild decrease for the month of August, and then we really started to see the housing prices drop in 2008 and 2009. What's interesting is, in podcasts I was doing at the time and in these presentations, I was talking about what was going on here. And as the inventory numbers went crazy, I mean, if you can think back to the previous slide where we were seeing what the inventory was doing at this time. Remember, in the 2005-2006 timeframe, when the inventory was going through the roof, we were still seeing people not getting that the market had changed. Suddenly, there were lots and lots of properties out there for people to choose from, and people weren't adjusting their prices. And what that did was contributed to the continuing increase in inventory as people just didn't buy. And obviously, the realization set in 2007. It still didn't react that much, but as inventory stayed very high in 2008, we really saw the prices come down. And as soon as you saw those prices start to come down, that's when you saw the inventory start to decrease, because people started buying them because they were reaching a more realistic number for people. Now, the average home price in 2009 in August was down 31.66%. That's a $242,752 drop from the same time the previous year. Now, the average home price was $523,991. A lot of this, I think, if you take a look, we'll see it here in the short-term thing stuff in a second, but a lot of the short-term sales as far as county numbers are concerned, and to a certain extent in Morgan Hill, we saw an increase in the average price, which I think reflects more activity at the higher end. With the short sale and foreclosure situation, we were seeing so much activity at the low end, that the properties that were selling were at the extreme low end of the price range, that the average price was staying very low. And I think the increases we're seeing recently in average price in some areas is more a factor of just conventional homes in a variety of price ranges being sold, except aside from all attention being paid to the extreme low end. So I don't think it means average prices are actually up. I think it simply means that the properties that are selling are now more representative of different elements of the market. So if you're even at the middle to high end, you're instead of sort of not really seeing a lot of activity at that level, buyers are starting to be willing to go into that level and really take advantage of some good prices even at those price points. Now let's go ahead and take a look at the median price. This sort of tells us where things are focused, and we can see that we've got a little bit of an interesting situation here, and it sort of illustrates what I was talking about relating to where prices, the number of where homes are priced in the different span of price ranges. So you can see now the median price is above the average price. And think of the median as the point that's the exact middle. If 100 homes sold, 50 homes sold above the median and 50 homes sold below the median. So what this tells us is that more homes that were above the average price sold this month than were below the average price. See what I mean? So that sort of tells you where the focus or where some of the predominant activity was as far as price range. So while the average price may be $523,991, more homes sold above that price than below it, which is you like to sort of see those two numbers very close to each other. You can see that through the tough times, look at 2005, 2006, 2007, the median price was way below the average price. So far more homes that were at the low end were selling below average price than above average price. This is just a good way to sort of get a feeling for where those purchases were clustered. Now, the median price was $537,000. The median price change, it was down 32.88% from last year. That's a $263,000 drop. Now, the highest priced single-family residential home in Morgan Hill was at 18241 Yeagus Creek Drive. That home sold for $900,000. Its original list was $1,139,000, and that was on the market for 125 days. The lowest priced single-family residential home was at 7370 Croy Road. That home sold for $125,000. It was originally listed for $139,900, and that was on the market for a total of 206 days. So very long days on markets for both of those properties. Now, the average price per square foot in Morgan Hill was $272.97. Last month's was $260.35. So that kind of, and again, this sort of gives us a little bit of information as to where these properties were clustered. So it just sort of backs up the idea that what we're seeing is a little bit more activity at properties priced above the average, which is, I think, a healthy thing. We saw so many homes getting sold down at the lower end, and now we're starting to see some activity at some of those higher ends. Okay, let's take a look at the same information, but this time just going back months all the way to March of 2008. Let's take a look at that average price, and you can see a pretty steady decline. We've seen some blips, anomalies, jumps, slight big jumps, sometimes equally substantial drops. Those variations can be explained by the fact we don't really get a huge sample of sold properties in Morgan Hill on a month-to-month basis. So you can get one very expensive home that really skews the average price down or up. Didn't really see that this month. The distribution was really pretty even. And, of course, over time, we're seeing that the general trend is down. Again, the average home price was $523,991. The percent change from July to August, the average price was down 14.58%. That was an $89,409 drop. And the median price of a home in Morgan Hill, was down from last month by 5.20%. That's a $29,450 drop. And that gave us a total of 37 homes sold in the month of August. Now, what's interesting here to see is that we've had a pretty interesting time relating to the relationship, right, between the two, between median and average. And you can see that the median has actually been below the average for quite a while. You have to go back to February to see a difference there. And then in January, clearly there must have been one or two properties that were very high end that sold that really skewed the average price up. But you can see that because of the median, the majority of properties were priced way below that. Now let's go ahead and take a look at days to sell. This basically tells us how long it took for homes that managed to sell to get sold. Number is going to be 158 for this month. That's actually a decrease of 3.07% from the same time last year, so not a substantial change. But that's five fewer days to get a home sold this year than last year. The lowest days on market was 0, which basically means that a property sold before it ever got put into the multiple listing service. There's a variety of ways that can happen. Some of them are perfectly understandable and explainable, and others are a little bit less so. I really don't, in a market like what we have today, I do not understand how anyone would want to try and sell a property without using the multiple listing service. But there are some folks who choose to only get their home marketed through an office that will just sell it through their contacts without using the multiple listing service, and not enter it into after it until the property has sold, just so that statistics can be kept up to date and maintained. The other possibility is it was such a hot property that again, as there's 0, there's none this month, but under no circumstances where it would happen, it could be that property was just so hot that it sold very quickly, that they had standing offers, buyers waiting, that type of thing. Which would probably be a short sale or foreclosure at a very low price. Now, let's see, the lowest days on market. I'm sorry, no, we did have one property that sold in 0 days. The longest days on market was 523 days, and the next closest below that was 513 days. So we were selling off some very old inventory this month. Now, as I said, there was one property that sold in 0 days. There were 3 properties that sold in 1 to 7 days. 7 properties that sold in 8 to 30 days, 4 properties that sold in 31 to 60 days, 3 properties that sold in 61 to 90 days, 6 properties that sold in 91 to 180 days, and 13 properties that sold in over 13 days. Now, 29% of the properties that sold in less than 30 days. So there is still activity that's getting these properties sold quickly. Again, as I've said, I think in just about every show now for the past 6 months, it really comes down to what kind of a job your agent's doing for you as far as getting your visibility out there and how well of an informed decision you've made on how to price your property. You need to be the most competitive property at your price point. Now, as we've seen, there is renewed activity at higher price points. So it doesn't mean you have to just be the cheapest house on the market. It means that given your amenities and your location, the number of bedrooms and baths and square footage and lot size and all that sort of stuff, when compared to other competing properties, you simply need to offer the most for the dollar. There are folks out there that are shopping in, say, the $600,000 to $800,000 range. Maybe they're looking for anything under $750,000, and you simply need to be the one that they perceive as having the most to offer at that price range to get yourself sold. So if getting yourself sold in as quick a time as possible is important to you, you really need to reevaluate how you stack up against the competition. All right. Now, let's go ahead and take a look at the same days to sell, just going back to February of 2008 here, and see how we've been performing. You can see it fluctuates. There's a lot of seasonal influences that play into how long things sell. What's interesting is sometimes here you'll see the numbers, the days on market increase during times when sales are at their best. What's interesting to look back and see in August of 2008 last year, we're at 163 where things ramped up. You start to see the days are increasing from May to August this year. A lot of that has to do with times where sales are increasing. If your sales are increasing, you're probably selling more properties than have been normally listed in the last few months. So you're digging into inventory that's been on there for a while. So you'll oftentimes see in a market like this with so much inventory that's been on the market for so long, you'll see these average days on market increase when sales increase, because you're simply taking these properties that have been on the market forever off of the market. Now, the days to sell was up 26.4% between July and August. That was a 33-day increase in the number of days to sell. And it's harder to explain that particular jump strictly on the basis of the number of homes that sold. But with the numbers we just reviewed, where we had over 500 days on a couple of homes, it's easy to see how the average could get pushed up there to the extreme. I think that really what you need to calibrate yourself to is if you're a seller and you're following through on getting this property sold, you're really looking analytically at your competition and who you're sort of against in the marketplace on trying to get your property sold. I think it's very realistic for you to be able to get your property sold within anywhere from 30 to 90 days. If you're really aggressive, if you're really out there and marketing hard, I think 30 days is possible. As I said, 29% of the homes that sold in 30 days or less. And I think if you're a little bit more aggressive on your price, but you're willing maybe to be flexible on other terms and conditions of your contract, you can easily get yourself going in 60 to 90 days. But it's gonna be very key for you to be careful about your options and who you choose to be your real estate professional to get all that stuff done. All right, now let's take a look at where some of these properties were located. You can see most of them are closer into town here. We did have a few properties that were really out there. I know a few of them that were out there were some of these ones that took a really long time to get sold. I've shown some properties that are way out there, say off of Castle Loma Road and Little Uvas Road, and those guys are way out there. The commute out to those areas is pretty extreme, so it's tough for those folks to get sold. I'm glad to see those folks have had some activity, but you can see most of it's clustered on the west side of the freeway, more downtown, say between Tenant and Cochrane, all the way going down. A lot of good deals to be had there. A lot of properties there that would make great investments. And I know there were a couple I was looking at that actually sold in August. But there's the spread. I don't see any trends there that are anything to get alarmed about or anything that might inform us particularly. I hope that's information that's useful to you in some way if you're somebody shopping. Now, I do appreciate you taking the time to listen to what I have to say on these subjects. I won't go through and read all the ways to get in contact with me again, but I'll put them here for your convenience in case you'd like to get in touch. I look forward to talking to you all next time, and I hope you have all the luck in the world getting your real estate needs taken care of. Thanks again.